What if I told you your bank has a secret number? And the moment you hit it, they basically fire you as a profitable customer. Not because you did anything wrong, not because you broke any rules, but because you finally stopped being useful to them. That number is $20,000. And today we're pulling back the curtain on exactly why your bank prays you never get there. Let me describe something that might feel uncomfortably familiar. You check your bank balance before buying coffee. Not because you're careful with money, because you're scared of what you'll see. You do mental math at the grocery store. You let unknown numbers go to voicemail because it might be a collector. And the worst part? It's not even the big stuff that breaks you. It's the $2 to $100 car repair, the $80 doctor copay, the fridge that decides to die on a Tuesday. This isn't a character flaw. This is a trap, carefully designed. And right now, 60% of Americans are living inside it. But here's what changes everything. There's a specific threshold, a dollar amount where the entire game shifts. That threshold is $20,000. Last year, American banks collected $7.7 billion in overdraft fees. Billion. With a B. 7.7 of them. And that money didn't come from corporations. It came from regular people whose accounts dipped a few dollars below zero while waiting for a paycheck to clear. Here's how the math works against you. Your account sits at $12. A $17 automatic payment goes through. You're now $5 negative. That'll be a $35 fee. Please. And if 3 more payments try to clear that same day, 3 more fees. I've seen people wake up to $140 in charges from one bad timing situation. Not reckless spending, just timing. Read that again slowly. Having less money costs you more money. But the moment you have 20,000 in savings, 0 overdrafts, 0 fees, 0 maintenance charges. Every single revenue stream gone, but wait, there's more. Many banks charge monthly maintenance fees just to have a checking account. $12, $15, sometimes more. They'll waive it, but only if you keep $1,500 or $5,000 minimum in the account. Consistently, every single month. But if you're living paycheck to paycheck, money comes in and goes right back out. You can't hold that minimum. So you pay $12 a month. That's $150 a year. To store your own money, let that sink in. They are charging you for the privilege of holding your cash. But with 20,000 in savings, you clear every minimum balance requirement easily. No monthly fees, no maintenance charges. Another revenue stream dried up. I want you to imagine you need $1,500 right now, not next month. Right now, maybe your transmission blew. Maybe you got an unexpected medical bill. Maybe your landlord just served you with a notice. If you have nothing in savings, here are your actual options. A payday loan at 300 to 400% annualized interest. A title loan that could take your car if you miss one payment. A personal loan at 28% APR. A credit card cash advance with fees stacked on top of fees. These products aren't accidents. They were designed for exactly this moment. Your desperation is their business model. When you're desperate, you don't comparison shop. You don't read the fine print. You don't negotiate. You say yes to the first thing that solves the problem. But when you have 20,000 in savings, you open your banking app, you transfer the money, done. No loan, no interest, no fees. And here's the detail I love most. Credit card companies have an internal term for customers who pay their balance in full every month. They call them deadbeats. Seriously. That's the real industry term. Because you use their infrastructure, you collect their rewards points, and you give them absolutely nothing in return. You are, from their perspective, a failed customer. Wear that badge, frame it, put it on the wall. Now, I want to talk about something that rarely gets discussed in finance content because it's not about numbers. It's about what financial stress actually does to your brain. Studies show that financial stress consumes the same mental bandwidth as losing 13 IQ points. Your brain becomes narrowly focused on right now. It cannot think long-term effectively. Not because you're not smart, because there's no bandwidth left. Here's a situation I want you to think about. Your job is making you miserable. Your boss is unprofessional. The environment is toxic. You know you should leave. If you have zero savings, you stay. You have to. You take the abuse. You smile. You keep showing up. Your boss knows this. Your desperation is their leverage. But if you have 20,000 in savings, you have 4 to 6 months of runway. You can walk tomorrow if you need to. You can negotiate. You can set boundaries. You can take the better opportunity, even if it pays less right now. And here's the sneaky fifth way banks profit from your stress. When you're financially stressed, you make worse decisions. You buy things impulsively because you need a dopamine hit. You say yes to upsells because you're too exhausted to fight back. Stressed people are profitable people. They're easier to upsell, easier to pressure, easier to squeeze. But when you have 20,000, you can walk away from bad deals. You can wait for sales. You can simply say no. The money doesn't just protect you from emergencies. It protects you from people who need you desperate to control you. $20,000 doesn't just buy security. It buys you leverage. And leverage changes everything. All right, let's get practical. Because knowing why 20,000 matters doesn't get you there. A plan does. Step 1, find the gap, even $50, even 100. That gap is your engine. Step 2, automate before you see it. The money moves before it hits your checking account. Not what's left at the end of the month. The end of the month never comes. Automate it. Like a bill. Step 3, treat it as mandatory. You wouldn't skip your electric bill to go out to dinner. Apply the same logic to savings. Step 4, direct every windfall. Tax refund, goal. Bonus, goal. Birthday money from grandma, you know where it's going. Step 5, kill one thing you won't miss. Find it, cancel it, redirect it. $400 a month, $4,800 a year. 20,000 in roughly 4 years. Those 4 years will pass no matter what you do. You can arrive with 20,000 in the bank or exactly where you are today. The time passes either way. The only variable is what you do with it. Your bank built their entire business model on people staying on the wrong side of that wall. Every fee they've ever charged you, every interest payment, every product they sold you at the worst possible time, all of it depended on you not having this cushion. Every dollar you add to that savings account is a dollar they cannot extract from you. Every step toward 20,000 is a step away from being their ideal customer. Make them hate you. If this video shifted how you see your savings goal, hit that subscribe button. New video every week. The financial stuff that actually changes real lives. And drop your current savings number in the comments. 0, negative, 500, 8,000. No judgment, no shame. Let's track this together. Go stack that cash. I'll see you in the next one.